Good afternoon. It is a pleasure for us being here tonight representing the University of Monterrey. We are Jorge Deux, Juan Hernandez, Mauricio Marchant, and Andrea Madero, and we're presenting our evaluation summary on the company Becle S.A.S.B., better known as Cuervo. Cuervo, founded in 1758, has a vast experience producing tequila, which positions them as the largest producer worldwide. The company has presence in more than 85 countries and has over 30 different brands of both alcoholic, non-alcoholic beverages, and cocktails ready to drink. It used to be a privately owned company until last year's IPO. Moving forward to our investment summary, we issued a whole recommendation based on 5 main reasons, which are growth opportunities in some spirits, mergers and acquisitions, our evaluation by 2 different methods, a low free float of the stock, and a stock price at discount. These are sustained by the following arguments, where we expect a growth in the spirits industry of 2% annually for the next 5 years, premiumization of brands, a possible increase in revenue by marketing expenses, future M&As, our target price of 30.70, and a low float of the stock, which causes low liquidity and high volatility.
For other considerations for hold, we consider the volatility that was seen in the stock price throughout the year with the daily returns of Jose Cuervo. When it's annualized, it's significantly above some benchmarks like the Mexican stock price and the exchange rate between the US and Mexican peso. And this, we consider this is due to the low free floating stocks outstanding that are available.
Valuation. We did valuation composed of 2 approaches: multiple analysis with a 16% weight and a discounted cash flow with a remaining 40%. However, this valuation approach lays out a target price of 30-70 Mexican pesos, representing an upside in the stock price. For discounted cash flow, we use a free cash flow to frame, and we made 5 years projection taking into consideration the assumptions of the EBITDA, effective tax rate, CapEx, D&A, and working capital, for which there are 4 key items, and with its main characteristic. Number 1, EBITDA has upside with a CAGR of 68%. Work result is greater than industry competitors, 923% compared to a 570 on the industry. Next. CapEx calculation is based on a percentage of revenue. And finally, its multiple corresponds to Jose Cuervo multiples, in this case, 15 times.
Now, for the relative valuation, we have this chart, which shows the comparison between Cuervo's forward multiple and that of its peers. The peers were selected using different criteria, and we ended up with a sample of the industry with 4 companies having the biggest market cap and 3 companies having a market cap similar to that of Cuervo. With that data, we obtained the average and the median of the industry, and then compared that to that of Cuervo. This method threw a 30.08 Mexican pesos target price and shows a relative undervaluation of the stock. Still, there could be other reasons behind this, such as the low free float of the company, which could skew the enterprise value and its low debt. We now move on to the financial analysis. First, the balance sheet. We can see in the 2006-2017 year over year, the PPE has grown almost 86%, which shows the aggressive M&A strategy followed by Cuervo, with the acquisition of already established brands such as Pendleton and Bushmills. We can also see in the structured capital that equity is the one supporting most of it, which means that the company is ready to take on more debt or leverage acquisition.
Furthermore, we analyzed some parts of the income statement, for example, the revenue. We see that it remains somewhat constant throughout the years, and we forecasted as well some parts. This is especially significant. We see that it remains somewhat similar, with some confidence intervals increasing throughout time. We also consider the revenue compared to the other competitors with a box plot of the variance of the interquartile variance. And we can see that with a similar amount of revenue, there's a similar amount of variability, and as you go up in revenue, you have more variability. So we can say Cuervo is within competitor range.
There are metrics of comparison. These are green is better, yellow is slightly below, and red below than benchmark. Jose Cuervo growing faster than competition, and operates expenses reflect aggressive marketing personalization with a promise to sales. Statistics. Strong correlation with the marketing and sales expenses. That means for every dollar spent, there is a $199 more revenue. Cash. Jose Cuervo has a balance in cash when acquisition of its assets is occurring.
Moving on with the ratios, we analyzed each one. The liquidity shows that Cuervo is doing much better than its competition, as it's not that leveraged. Again, it's just a symbol for Cuervo to start getting more debt in order to finance its acquisitions. In working capital, Cuervo's greatest strength is its inventory rotation. It's rotating it much faster than its competition. With the rest, it's doing quite similar to the competition, which could improve. Solvency and debt, again, it's shown that Cuervo could be more leveraged to make its acquisitions, especially with the net debt EBITDA. The EBITDA capex over interest expense. We can see sometimes that the net debt EBITDA it's negative. Which means that it has more cash than debt. So it's just another symbol that it can get more debt to finance its acquisitions. And profitability is doing a bit below than the competitors, but it's not something to be alarmed of, especially because of the cost of the raw material, and they have a high marketing expense compared to the competitors, and as well because they are leveraged, their equity multiplier is much lower. So if they get more leverage, the return on equity would increase.
On a financial analysis of EBITDA per geographical segment, we can observe that the rest of the world region has an EBITDA of 37%, but still the US market is the most important in terms of sales and investments. Mexico has the lowest EBITDA, mainly because of the high cost of production, assuming an increase in agave price. On a same EBITDA expected for 2018, we can see an increment of 15 basis points. On this table, we can see the most profitable segments for the company, and Jose Cuervo has the highest profitable with 62.11%. Continuing with an industry overview, we can see that Cuervo is part of the alcoholic beverages industry that can be mainly divided in three different segments: beer, wine, and spirits. Spirits are driven by lifestyle trends of consumers and diversification, and has had an increase in demand by emerging markets and premiumization. Premiumization has had a positive impact in Mexico and is gaining popularity in the US. On this graph, we can see that China is the country with the highest spirit consumption per country, and those in orange are the countries where Cuervo has the higher presence.
So now for the Mexican industry. We can see that millennials are pushing new trends, such as the increasing popularity of whiskey and mezcal and premium brands. In USA and Canada, we see also opportunities in the tequila and whiskey segments, but we also see an overall slower growth in the industry. It is also important to note that in this segment, in this industry, beer is losing market share against spirits. Now for the rest of the world, we comprise 5 of the most important countries in which Cuervo is in, and also we have the opportunities in tequila, whiskey, and white spirits. Now finally, for investment risks. We wanted to emphasize the most important risks, and we start with the agave prices. With the agave prices, since Cuervo is the #1 tequila producer in the world, and with using its profits, margins have been decreasing dramatically. Also, we want to emphasize change in consumer trends. Since, even though that Cuervo is diversified in the spirits industry, other considerations such as the legalization of the cannabis in Canada or talks of doing so in Mexico or in the United States could hinder alcohol sales, since these two products are considered to be substitute goods. Finally, we just want to mention the adverse weather conditions and the departure of key personnel as some risks to take into account. Thank you for your attention. That's it. We now move on to Q&A.
Thank you very much for the presentation. Let me kick off. A number of your points on the slides talked about the acquisitions that they can do, and I'm trying to draw a few things together. So you talked about the industry growth rate of being 2% annually, and then you talked about them growing EBITDA at 9.68%. So I'm trying to understand, is their ability to grow EBITDA just because of acquisitions, or are they just more successful compared to their peers? And why do you expect them to be able to grow that at such a high rate compared to where the spirits industry generally is growing?
Well, first, there are some opportunities in some segments. They can specialize in like the whiskey, which is growing 5% in Mexico. And by doing so, by already acquiring established companies, they don't have to wait until their brand kicks in or penetrates the market. They could already buy a brand that is established and that already has good sales. And I don't know if any of my teammates...
Yes, also in the financial analysis, there's lots of areas of opportunity for Cuervo that could help that. For example, getting more debt to get more acquisition, to be more aggressive on that, to improve their ratios. That will be very helpful. There was also in the working capital, they were doing very good. Cuervo was doing very good. They're rotating the inventory. They're just paying too soon to the suppliers, and they're taking a lot of time to get in the cash from sales. So there's some inside operations that they can do in order to push the EBITDA to get more cash instead of financing for example, the client or financing the provider. So it could be possible, yes.
And just let me push you a little bit more on the acquisition. What evidence can you give us of their ability to buy a company and be successful about it? Because a lot of what you said is acquisitions are important for them to be able to grow their volume. So they've done a couple of acquisitions. What evidence is there so far of them being successfully able to integrate and improve the acquisitions they buy?
Well, I have a question. I don't know if I can say something that is not in the Q&A or in the appendix. Yeah? Okay. Well, we actually did some regressions about the revenue and the EBITDA with the capex that they make. And there's for every dollar spent in capex, there's like a 0.73 in EBITDA. They have some work to do in terms of in acquisitions, but the company has said in their conferences and publicly that that's the focus they want to do, and we're taking into consideration what they know from the inside and that they're capable of doing that. And besides, we have not that many data available to make like 100% or like a 99% regression significant. So we rely more on what Cuervo, on our conversation that we have, and then on their perspective for that.
The decision of giving the weight of 60-40 to multiples and DCF means that you believe that the valuation of the company and the performance of the stock will be more dependable on the go with the flow of the market than on the own story of the company?
I think so, yes. Depend of the last exercise and the year over year. And I think so is the growth to Jose Cuervo depends on the create new brands.
We decided to give it that scale because when we obtained the relative valuation, we saw that there were some factors that could skew the multiple and could give a difference, because we saw that the three competitors that had the similar market cap had a multiple that was way above the one of Cuervo and the one of the competitors with the highest market cap. That's why we decided to give it a 40%, to give it a lower scale in the valuation for the price.
Going a little bit farther into acquisitions, what we have seen is the selling of premium tequila brand and any acquisition of whiskey brand. So I don't know if you can elaborate. What was the difference in prices, market share, growth in each of those brands, and if I mean, what is the rationality behind doing that rather than only diversification? And if you can find that, would you expect them to do more diversification by selling some of the tequila brands and acquire something else? Or what would you be thinking in that sense of ideas?
Mainly that they can continue with their tequila brands already established, continue making them premium, and also acquire new brands. But we have like a point on diversification, mainly because the US is the highest market, and whiskey and tequila are the most profitable in trends for young adults. So continuing with their premium brands of tequila or acquiring a new one on whiskey.
Do you consider that transaction profitable for the company?
The one of making tequila a premium brand, yes.
No, selling.
Selling a tequila brand.
Yeah, and acquiring a whiskey brand.
No, I think that they should stay with their tequila brand but acquire a new one.
For you, what will be the reason to lost share in the US market? Please go ahead.
Can you repeat the question, sorry?
What will be the reason to lost market share in US market?
No, well, we said that beer is losing market share in the United States, and this is because of the recent trends of the millennials, which are acquiring a different taste for spirits and alcohol, and instead of going towards beer, they prefer spirits such as whiskey. They also prefer spirits with like mezcal, which have like a history behind, that are more exotic instead of just beer. That is mainly the reason why the beer is losing market share in the United States, and spirits is gaining that market share.
Can you tell me where, with what brands and how Cuervo is facing competition?
Mainly in their Jose Cuervo brand. As we said, that is the most profitable segment for the company. And that is Jose Cuervo is the largest producer of tequila worldwide. So with that brand, they are gaining territory in the market.
But the competition is trying to attack this dominance on the tequila. Is the same story in the United States and Mexico for Tequila Cuervo?
No, it's not. In Mexico, tequila is already a mature market, but mezcal is gaining more popularity. But in the US and Canada region, tequila is being more profitable.
And also there's a lot of competition with Diageo, which is and Pernod and Remy and Davide. They all have their own tequila, which is directly competing with that of Cuervo's.
Well, and also as analysts, how do you see, how do you find the governance of the company now that it's a public company? Corporate governance of the company.
Well, as it's part of the Bolsa Mexicana de Valores, it has to require a minimum standard, which is being accomplished. There could be some improvements, for example, removing a bit of the family from getting into much into the business, but other than that, it's doing all right.
What would make you change your mind and say, you know, this should have been a buy and not a hold?
Well, maybe the company had if the markets presented a higher growth.
Yes, and also it's getting very competitive. The market, we would like to see Cuervo spending more in marketing, using its cash already raised by the IPO in the mergers, marketing, or premiumization, and making the financial ratios and the operations more efficient. And that's what we will be waiting for in order to make it a buy.
Thank you. Okay.